Hi, good afternoon, everyone. Thanks so much for joining us. We're going to go ahead and get started. Welcome to this Bank On webinar. My name is Genevieve Melford, and I'm the Director of Research at CFED, and I will serve as the moderator for today's conversation. Before we get started, I need to go over a few housekeeping details. The first is that this webinar is being recorded and will be made available online in the coming days, so diligent note-taking is not required. All participants on the webinar will be muted to ensure sound quality for the recording, but you're welcome and encouraged to ask questions, which will be answered during the last half hour of the webinar. To ask a question, click on the Questions portion of the GoToWebinar Control Panel on your screen and type your questions in the text box provided there. You can type your questions in at any time during the webinar, and once all the presenters have finished, I will read aloud the questions asked and have our presenters answer them. Of course, if you have any technical questions or difficulties, we're happy to answer those as they arise. You can email those to gotowebinars@cfed.org, and a member of our IT team will help you out. Finally, if you're having trouble dialing into the conference phone line, you can also just listen through your computer with speakers or headphones. With those housekeeping details out of the way, I'd like to say a word about the organizations behind today's webinar. The information and resources for the Bank On and broader financial access field that we're able to share with you are the result of almost a year of intense collaboration between a number of partners, many of whom you will hear from today. With the leadership, vision, and financial support from the Treasury Department's Office of Financial Education and Financial Access, CFED has been honored to work closely with the San Francisco Office of Financial Empowerment, the National League of Cities, and the New America Foundation to produce a suite of research products and tools and to relaunch the joinbankon.org website to support the incredible and fast-growing field of Bank On financial access programs around the country. Our first presenter today will be Louisa Quitman, Director of Community Programs for the U.S. Department of the Treasury, who will give an overview of Treasury's perspective on financial capability and Treasury's role in expanding this unique financial access platform. Second, we'll hear from Lee Phillips, who will discuss the history of Bank On since its inception in 2006 as an initiative of the Treasurer of the City and County of San Francisco. Lee is a program manager with the San Francisco Office of Financial Empowerment. Third, we'll hear from Laura Fisher, who will present highlights from the first ever scan of the national Bank On field. Laura is an associate with the Institute for Youth, Education, and Families at the National League of Cities. Next, my presentation will walk you through the Research Your Community data tool on the new joinbankon.org website. And finally, my colleague, Sean Luchtefeld, will walk you through some of the other key features of the new Bank On site and explain how you can become a member. Sean is a communications associate here at CFED. So now that I've introduced each of our speakers, I will turn it over to Louisa Quitman for an overview of Treasury's interest and involvement with this work.
Thanks, Genevieve. Let me start by talking a little bit about why the Treasury Department is interested in the Bank On work and on financial access in general. The Department of the Treasury's mission is to promote the nation's economic well-being, and we believe that promoting the financial capability of all Americans is a vital part of that mission. We know that good financial decisions and management of financial resources are the basis for individual and family financial stability, which in turn contribute to the financial stability of the whole nation and the whole economy. And the future prosperity of our citizens and our nation depends in part on the ability of Americans to make informed financial decisions. And I think we learned the converse of that over the last few years, where poor financial decisions or access to bad financial products and services helps contribute to significant economic decline in the country. So financial capability, we believe, is really about the ability of individuals to make and execute good financial choices for themselves and their families. It allows them to invest in their future by helping them build retirement savings, save for an education, a home, a small business, and also is really about enabling Americans to also avoid detrimental financial and products and services and overcome challenges that they may face, such as changes in income and asset values. So all of those are outcomes of financial capability, and financial capability is really comprised of three key elements: knowledge and skills coming from financial education, access to appropriate and fair financial products and services, what we call financial access, the opportunity to actually have financial products and services that help people move ahead rather than fall behind, and consumer protection against the worst abuses and tricks and traps. So, we know that, moving on to, we know that many people are currently not in the financial system, and many people don't have access to financial education and financial access. And in particular, the FDIC study showed in 2009 that 25% of the American households is unbanked and underbanked. Almost 8% of households have no bank account, no relationship with the financial service business, and are basically working in the fringe economy or the cash economy. And another 18% have a bank account or a credit union account, but are also regular users of fringe financial services such as check cashers, money wiring businesses, so forth. I think those numbers, as bad as those numbers are, there are populations and communities which have really been in financial crisis long before the rest of us in the last few years, and particularly just looking at unbanked percentages and underbanked percentages are much, much higher in certain communities, such as in the African American population, Hispanic, Native American, Alaska Native populations, as well as among single-parent households, households with annual incomes below $30,000, low-income households, and households where the primary adult has less than a high school education. So, but probably most of you on the call already know all that. So you're probably more interested in what the Treasury is looking to do about that. And that's really where we have come up with the idea of Bank on USA. And you'll hear from Lee and from my other colleagues on the call really the genesis of the Bank On movement, which really has been a grassroots movement in communities all across the country. We think this is a great idea at the Treasury Department, and we really are very interested in encouraging those grassroots efforts that we have seen really grow and blossom around the country, continue to innovate, enhance their services, and serve more communities. So we have proposed a Bank on USA initiative, which is in the current President's budget at a little over $40 million, to help millions of Americans secure more financial futures through supporting community-based efforts like the ones we're talking about today, promote product, service, and delivery innovation to meet consumer needs at lower cost and with better service through the market, as well as consider how we can use pilots, awards, and competitions to assess and promote effective practices. So as part of that, really kind of a down payment on our work, our Bank on USA work has really been this Bank on USA infrastructure project that we have been working on since the beginning of this year, as Genevieve mentioned. And we've been very fortunate to work with CFED and our other partners, the City and County of San Francisco, the New America Foundation, and the National League of Cities have really been wonderful partners with us in this project to really help build up the field of Bank On and community financial access initiatives around the country. And so we've really thought about what are the critical steps to build on the work that's been done in the field to date to expand the resources available to enhance and support the development of new and high-quality Bank On and similar initiatives. You'll hear more about the work as we go through this webinar, but really the work that we've done so far does focus on the four key areas: the upgrades to the Join Bank On website as a resource for new and existing Bank On initiatives, the community needs assessment tools that you'll hear about, the Banking On Opportunity Report, and also data collection ideas and recommendations for the field. So I think that is the overview of why we're here, and very interested in hearing your questions and feedback as we go through the rest of the session.
Thanks so much, Louisa. Our next speaker is Lee Phillips, who will provide background on the creation of the Bank On model, as well as the joinbankon.org web platform.
Thank you, Genevieve. Can you guys hear me okay?
We can hear you. Thanks.
Great. So thank you for the opportunity to participate, and really excited to be a part of the Bank On USA program. And And I just wanted to give, I'll be really brief actually, because I think probably most of the people on the call are familiar with Bank On and what it's about, so I don't want to go into too much detail, but just a little bit of history about the first version of joinbankon.org and how it relates to technical assistance. So back in 2005 and 2006, the City of San Francisco, in partnership with the New America Foundation, the Federal Reserve Bank of San Francisco, and our partners at the nonprofit EARN, decided to start looking at issues of financial inclusion in our communities, because we were very concerned by some data that we had seen that showed about 15% of our households being unbanked, and but more concern was the way that was disproportionately affecting communities of color and low-income communities. So we had, I think, 1 in 2 of our Latino and African Americans in San Francisco was unbanked at the time. And as our work is housed within the Office of the Treasurer and we manage all of the banking relationships for San Francisco, we decided that we would approach our banks and really look at developing a program that would increase the supply of starter account products that work for the low-income unbanked market, and then also raise awareness among unbanked consumers about the benefits of account ownership. So the first part of that being, can we look at the barriers to banking and really try and assess why certain groups are being excluded and what those product changes can be. And then the second, how can we educate the public and use our voice as a public agency to really get the word out that a bank or credit union is the best place for you to keep your money. So we work with banks and credit unions, and as you all know, developed some product features around helping people get second chances to bank if they're on the check system, helping people who didn't have California state ID to open accounts with alternative forms of identification, and then looking at some of the fees associated with those accounts, like minimum balances and monthly fees, etc. We launched in September of 2006, and over the last 5 years, I think we've banked about 10,000 people a year, or opened about 10,000 accounts every year since then, which has been really remarkable. But I think the thing that's really taken us by surprise is the amount of other communities who have launched similar efforts across the country. So once we started Bank on San Francisco, about a year later, I think it was the city of Seattle who contacted us, and then followed by Evansville, Indiana, and the state of California. And so all these different groups started coming forward and saying, we can do this in our community, and we think a lot of the reason for that is the public-private model that we developed here. And, of course, the early successes that we showed in the first year when we opened 10,000 accounts, and that banks and credit unions were really enthusiastic about this work. So, of course, many communities, and most communities, there is some form of local government. There's many great, wonderful community groups. There's also banks and credit unions. And so I think that was really what spurred the replication efforts. And we've tried to be as helpful in fostering that as we can, and have had help from many great partners, not least of which was the National League of Cities.
Hey, Lee, can I just ask you to speak up a little bit more? We've gotten a couple of requests for that.
I can. I will.
So thank you.
I will turn up the volume. So then back in 2008, we were lucky enough to receive the James Irvine Foundation Award for Innovation in California Innovation. And that came with, a prize for the program, which is great. But it also came with a grant that could be used for replication efforts. So there was additional funding available for programs that wanted to help other communities start the same programs. And we thought, well, fantastic, because at the time we had been receiving large numbers of requests for technical assistance, and we were trying to talk to everybody on the phone and sending all the attachments and materials by email. And it was our marketing firm at the time at McCann World Group who said, why don't you build some kind of a toolkit? We'll help you build it and put everything online. So we took the money from the Irvine Foundation, and that is what we did. And we launched, I guess what we call here, joinbankon.org 1.0. And the real goal of that originally was to help us triage the large number of requests for technical assistance and the growing number of programs. And that's really what led to the creation of joinbankon.org, which I believe we launched at the end of 2008, although time is kind of all blending into one at the moment, but I think it was the end of 2008. So when we originally designed the site, we had 4 main goals. The first one was to help people learn about BankOn and what it was, and to launch their own program. So people needed access all in one place to the information about what the program was, how it worked, who needed to be involved, and then the ability to launch their own program. We also were hearing from banks and other groups that they were involved in large numbers of programs, and any help that we could give around managing and updating the programs that were emerging would be really helpful. So the original design was also going to help people find programs in their community. It wasn't unusual for us at the time to be getting 3 or 4 requests from different groups in the same city, all kind of trying to work to find each other, I guess. So we tried to help with that. We also thought, well, what a great opportunity with all of these different places across the country getting engaged in this work. We need to provide a way for us to organize ourselves, for us to network, and for us to inform each other about what's going on. So that was another goal, was that if we can see the kind of all in one place, what we've created, that's going to help programs communicate with each other, and that's why we obviously had discussion forums and other things on the website. And then last, of course, we research and contribute to the field. So there's a lot of great work out there, a lot of great policy work, a lot of great research and papers being published. And we also felt if we could help put those all in one place, then we would really be doing a service by creating some cohesion around this as an emerging movement. So there were some downsides to joinbankon.org, the first version, namely that once we built it, it was very difficult for us to have the resources to maintain it and to grow it. And so that is why when we were approached by Treasury around BankOn USA, we thought what a great opportunity for us to really build joinbankon.org into what it was originally intended to be. And I think that CFED and their leadership on this has just been unbelievable, and you guys are going to see, if you haven't already, all the wonderful things that they've managed to do. So I'm going to stop there and hand it back to Genevieve.
Great. Thanks so much, Lee. And here's just a little sneak peek picture of what the 2.0 looks like, but Sean and I will both be navigating that and going that into much more detail in a little bit later today. But now that we've heard about how BankOn and the website got started, Laura Fisher is going to share with us sort of the state of this rapidly growing national BankOn field that this website was really created to serve.
Great. Thanks, Genevieve. Good afternoon, everyone. So like Genevieve said, I'm going to talk a little bit about our role kind of in this building up of the financial access field and the rapid spread of the BankOn model across the country. And of course, I'll also touch on the report that Genevieve mentioned at the beginning that was part of BankOn USA's infrastructure, building an infrastructure role, the scan of the BankOn field. I'm going to start by talking just a little bit about sort of our specific role with the other partners on the line around spreading and replicating the BankOn model. So as many of you hopefully know, we've been involved in these efforts to replicate the BankOn model since about 2007. We do this through our Institute for Youth Education and Families, which is where I'm housed. It's a special entity within NLC that we use to provide guidance and technical assistance to municipal officials on a broad range of issues affecting, obviously, youth education and families. In 2008, we launched our first BankOn Technical Assistance Project, drawing on the lessons learned from BankOn San Francisco and other experts in the field. And through that, we helped a cohort of cities develop and launch their own BankOn programs. And since then, we've been off and running, fielding a lot of those technical assistance requests that Lee mentioned, and have provided technical assistance to nearly 75 cities seeking to replicate the BankOn model. As part of that portfolio of work, we also developed something that I hope many of you on the line have seen, an extensive BankOn toolkit. You can find that on our website, and also it's also on joinbankon.org. So head there after this and check it out and pull up our toolkit. But we designed that toolkit essentially as a how-to guide for city leaders interested in establishing or enhancing a BankOn program in their own community. And then, of course, the other piece of our involvement here has been the opportunity that we've had to join with the other folks on the line, CFED, San Francisco Office of Financial Empowerment, and the New America Foundation, to be a part of Treasury's BankOn USA work. And that's been an exciting privilege and process for us. So a big piece of our role in that was developing the first ever scan of the BankOn field, the Banking On Opportunity Report. And we, through the technical assistance projects and work that we have been doing, we were able to, along with our colleagues here, to really keep our hand on the pulse of this rapidly expanding field, and from that we built out this report. And it's certainly something we couldn't have done without the other folks on the line you're hearing from today. And also, I would also like to take a moment to thank the local Bank On programs, who so many of you supplied a lot of information and insight that we used to inform the report. So, you know, this slide gives you an idea of what is in this rather long report, but despite its length, I would encourage you to check it out. And again, it's available on joinbankon.org, and you can also find it on our website at NLC and the Treasury Department's website. So the report, essentially, it's the first time that anyone has taken a comprehensive look at the emergence of financial access initiatives and the state of the bank on field, so to speak. It provides not only a snapshot of the field, but also it outlines the common features of the model itself and includes in-depth case studies of 2 successful programs, Bank on Seattle King County and Bank on Savannah. So what are some of the key findings from this report? One exciting thing is that we were able to outline fairly accurately, we think, what the current bank on landscape looks like. And you can see the screenshot up there. Of course, this is always evolving. When we finished the report in April, there were a total of 38 launched and operating bank on programs across the country. Today, that number stands at approximately 58 local, regional, and state programs, which is exciting that the model is continuing to grow and spread. Just to kind of give you a taste of what that looks like, I know maybe the bubbles on the screen, it's hard to tell exactly where they're all landing. So just to give you a taste, some of the most recently launched programs include Rapid City, South Dakota, Fort Wayne, Indiana, and Southwest Florida. And there's also a number of programs we know of that are under development. And again, you can visit joinbankon.org for a complete listing of the programs. And also, if you're on the line and you have a program underway in your community, you can also create a program page and add that to the site at joinbankon.org. So a few other things that we learned from the Banking on Opportunity report that I think it's worth mentioning. One thing we found, bank on programs are indeed reaching the and underbanked. Collectively, it's estimated that 300,000 new accounts have been opened since the launch of the first program, Bank on San Francisco, in 2006. Another finding, we were also able to identify some common barriers related to the bank on model, and that in turn, of course, is shedding some light on what we should be working on to help support local programs, part of that infrastructure piece that Louisa mentioned. So you can see those common challenges listed there. I'm sure many of them are not surprising. A lot of bank on programs have difficulty finding and sustaining funding. There are some challenges around tracking appropriate data to show the impact of the program, adjusting to the changing financial industry's regulatory environment. So all of these things, these challenges, are things that here at the national level we're trying to think critically about, and I know also that many of you with your own bank on programs are also working to address those challenges in innovative ways. And joinbankon.org is a great vehicle. It's a great way to throw some of those challenges out to your colleagues in the field, to share innovative solutions that you're trying, and to really learn from one another and to help us build the field as well. So that sums up our work and the report in a very small nutshell. I would encourage you all again to check out the report at joinbankon.org. And again, I want to thank our colleagues on the line for their contributions to the report and for all the exciting work we've gotten to be a part of through the Bank on USA initiative. So with that, I'll turn it back over to you, Genevieve.
Great. Thanks so much, Laura. And I echo that plug to check out this really, really interesting and kind of first time scan of what's happening across this bank on field nationally on the website. So now I'm going to segue a bit into talking about a brand new data resource on the website, which I am really, really excited about. So I'm excited to share it with you all. But before I talk about what the resource is, I just want to take a step back and for those of you who have not already been involved in this, just to let you know that having data on the size of the local unbanked population has been really critical for bank-on initiatives as they get started. You know, it helps local leaders understand the extent of the need for a financial access initiative in their community, and it helps them communicate about that need with others, including local financial institutions. And you know, beyond knowing just the size, as Lee kind of talked about a little bit with Early Bank on San Francisco and the research they did there, when you know which populations in your community are either you know, particularly financially underserved, or in the case of some of the data we're going to share with you, more of an indicator of likelihood of being financially underserved, because we have not surveyed people directly, but we can talk to you about why we think they're likely to be financially underserved. But knowing that can also help sort of design a well-targeted and effective local financial access strategy that really makes sense for your particular community and who lives there and what their needs are. So in the first few years of bank-on programs getting started, there was a great team of folks at the Pew Charitable Trust who was providing estimates of the local unbanked population to local initiatives, including San Francisco, which those local, kind of nascent local initiatives found incredibly helpful to have this data for these sort of diagnostic and communications purposes that I mentioned. And based on, really it's been a few years now that all of us on this webinar have just heard so much feedback from local leaders about the importance of this data. So we really wanted to make it widely available to local leaders around the country. So with Treasury's support and under the guidance of some other research experts from Treasury and the Urban Institute and the Federal Reserve Bank of San Francisco, we worked with an economist to develop a new methodology to estimate the size of the and underbanked market at the local level in the United States. As many of you probably know, the FDIC has done a terrific national survey of people's banking behavior, and that's where the data that Louisa quoted at the beginning of the webinar was from. And that's really fantastic, but that data does not go down to the local level. It's not available for cities or counties or neighborhoods. And those are really the areas that have primarily been the ones starting bank-on programs, and they really need to have some sense of their local need. So we worked with this economist to develop a methodology to estimate the size of the and underbanked market at that local level and to produce estimates of the size of the and underbanked population for all counties, cities, and census tracts in the United States that have 250 households or more. So unless you're from a really rural area, you might think that who doesn't have 250 households or more, but there are areas that don't. So we then make this data available on the website, on the new joinbankon.org website, in a number of ways in the section called Research Your Community, which I'm going to walk you through in just a minute. And actually, if you could switch us to the website, Sean, that would be great. So there might be a little bit of a delay as we click through the website. So I'm going to talk slowly and also bear with me. There's no delay when you're clicking around and playing with this yourselves on your own computers, but there may be a little bit of one in the webinar. So with the data tool that we created, you can do 4 things. You can get estimates of the number of unbanked and underbanked. Well, maybe I should take a step back and just show you how you get to that. Sean just showed us, but if you're on the joinbankon.org homepage, you can just click on that on the left-hand toolbar where it says Research Your Community. And then you get to this Research Your Community homepage where we are now. So from this data tool, you can do 4 things. You can get estimates of the number and percentage of and underbanked households in your town or county. You can get information on the prevalence in your community of populations that are more likely to be financially underserved. You can map, thanks to a partnership we have with PolicyMap, you can map the concentration of and underbanked households down to the neighborhood level. And you can also print a customized report on the financially underserved in your community that you can take to meetings, show to other people, generally used to help communicate the need for a financial access initiative with other leaders in your community. So once you're on this Research Your Community homepage, to look up local data, you use this search box in the blue box at the bottom of the screen. And you can either choose a county or a city to look up. And if you're looking for a city or town, you don't need to also enter the county it's in. You just select a state and then the county, or you start typing in the county or town that you're interested in. So for this demonstration, we're going to look at the data for Bronx County in New York City. So first you select New York State from the pull-down menu, from the state pull-down menu. And then in the county box, you start typing in Bronx. And you'll see that when you start typing, options pop up, and you just click on the one you want. So Sean is clicking on Bronx County, and then you just click Go. So you guys may have a delay, but some of you may be seeing this already. So what you see now is we're now inside the data tool. So the very first thing you see is the estimated unbanked and underbanked rates for Bronx County. You see that almost 21% of households in the Bronx are unbanked and over 27% are underbanked. And next to these estimates are the definitions of the data points. So that unbanked and underbanked definition there are the same ones that Louisa mentioned before, and they're the same ones that the FDIC survey uses. For the unbanked, it means having no checking or savings account at all. For the underbanked, it means you have an account, but you also continue to rely on alternative financial services to help manage your money. So if you scroll down to the bottom of the page, you see that, so those red numbers at the top are kind of the big picture highlights, but we provide a bunch of other information here too. So you'll see that we provide you not only with the estimated percentages, but also the estimated number of unbanked and underbanked households, which can be helpful when you're thinking about kind of what you want your campaign target to be. So this gives you a sense of how many households we think are unbanked. But we also provide the estimated number of unbanked and underbanked households and the percentages for the surrounding geographies. So we do this because without this additional information, it can be hard to put your estimates into context. You don't know if they're high or low. So we show you here whether or not you're looking at your city or your county. We show you the same information for the surrounding metro area, for the state, and for the country as a whole. So you can see here these numbers for Bronx County are a lot higher than for the surrounding metropolitan area or the state or the country as a whole. And in addition to the information on the kind of overall number for the county, we also have a line there that says the percentage of high unbanked census tracts. So in the same way that national data can kind of obscure differences across states, even city or county level data can obscure differences across neighborhoods. So what this means is that 88.1% of all of the census tracts in Bronx County have rates of being unbanked higher than the national average. Of course, that also means that over 10% do not, which shows that the Bronx County is not entirely monolithic. And if you're thinking about designing a targeted campaign in Bronx County, there are probably some neighborhoods you would focus on more than others. But this just sort of adds that additional nuance of the first information lets you know kind of broadly what the need is like in your city or county, and then this lets you know kind of about the intensity of need and some of the variation. Okay. So another resource that you have here is if you click on that at-risk populations tab, scrolling back up. So this un- and underbanked households tab gave you the data that we've talked about. But the next tab, at-risk populations, the impetus for this really comes from the fact that research is pretty consistent on the particular populations that are more likely to be unbanked. And Louisa talked about this a little bit in her presentation as well. But so what you have here is information on kind of the key categories that are correlated to being financially underserved. And that is household income, household race and ethnicity, educational attainment, age, and then information about kind of language and citizenship status. And these findings, the findings that we have here come directly from the FDIC national survey, but they also are borne out in pretty much all of the other research that's been done on who is un- and underbanked. So just to be clear, what this data is telling you is what percentage of folks who live in your community, in this case in Bronx County, fall into those categories that are particularly likely to be un- and underbanked. So if you could scroll back up to the top. In terms of income, households with income below $30,000 are significantly more likely to be unbanked than others. You can see that's almost half of all households in this county. Certain racial and ethnic groups, in particular Black or African American, Hispanic or Latino, and American Indian and Native Alaskan are the groups that are particularly likely to be un- and underbanked. Similarly, those without a high school education, those with younger heads of household, foreign-born non-citizens, and folks who do not speak English at home are all more likely to be unbanked, which also is borne out in the research that Lee cited when they were creating Bank on San Francisco. So the next resource I want to point out is the next tab at the top, which says Download as PDF. So if you click on that, you actually have a couple different options for the report that you want to print out for your community. So the options are, you can, the report will always include that sort of the data from the first page about un- and underbanked households, but you can choose if you want to include a second page on that at-risk populations data that we just saw, and you can choose if you want to include the Bank On logo on your report or not. Some people really like that, and in some places, if you have a different sort of marketing and branding campaign, or you don't have a Bank On program yet and you're afraid that people will be confused about that if you have the logo on there, it's just really up to you. You know your community, you know who you're talking to, and so this just allows you to decide if you want to have, how much data you want to have on there and if you want the Bank On logo or not. So this is an example of what that report looks like. On the first page, you have all of that same data, as well as a little bit more information about why does it matter if people are unbanked and what can be done about it. And then on the second page here, because we chose to include the at-risk populations, it includes the demographic data as well. But if you uncheck this box, you just get a one-page report that's just the first page of this. So the next tab, moving on, is an interactive map. This is where you start looking, this is where you can really start looking at that neighborhood level data in more detail. So when you click on this, it'll be zoomed in to the place that you are researching, that you were already looking for. So this map is already zoomed in to Bronx County. But if the view that you get is farther back, so that it seems to be shaded, you know, by city or something, or by county rather than census tract, just zoom in. And you can zoom in either by clicking in the map or by using that kind of zoom bar in the top left-hand corner. And so if you click on, and it, you know, the shading shows the concentration, the legend is there. There's actually a break point at 7.7%, which is the national average. So everything that's that color or darker is sort of higher need than average in the United States. And this can show you, you know, differences by neighborhood. The Bronx is perhaps not the most varied place there is because it's pretty high need overall, but there are some places that are less than average. As we mentioned before, when we saw that over 10% of the census tracts here are not high need, particularly compared to the national average. And so if you click on a census tract itself, it'll give you the, just click on anywhere really in the map. Okay, and then that bubble that pops up shows you that bottom one shows you for that neighborhood it's only 5.9%. So that's obviously actually one of the lowest need census tracts in the Bronx, which is 20.8%, and shows you New York City, the metropolitan area, the state, and the United States. So this is, if you're looking for census tract level data, the only place that you get the actual estimate for a census tract is by going into these maps and clicking on them by neighborhood. To print this map, you just scroll down to the bottom and see that print button there. You're going to want to have centered the map on however you want it to look when it prints. And then you just open that, and that's an additional sort of PDF that you can have that you can either sort of attach to your report with your data and hand out together, or use for whatever purpose you want. And then just the last thing I will mention about this data tool is that the final tab on the right about the data describes what this data is, where it comes from, and where it says read the technical documentation. If you could just put the mouse over that, Sean, in the third paragraph, the last few words of the third paragraph. If you click on that, it takes you to a technical document describing the methodology used to produce the estimates that populate this data tool. So for those of you who really want to get into the details of that, all of the information is available there. So thanks for bearing with that. I love this tool. I hope that you guys play around with it. I hope all of you already cannot wait and are jumping in to research your communities and surrounding communities. And maybe the one other thing I will mention, going back to the homepage for this, is that in addition to all of the great data that's already here at your fingertips and that you can use in all of the ways we've just talked about, if you want to do additional survey research of your own to really dig deeper into the nuances of kind of the particular financial habits and needs of households in your community, or the institutions available to serve them, and maybe even sort of survey your community's capacity to undertake a bank-on initiative, there's a whole set of local market research survey tools that we've compiled for you. So this is for those of you who want to go beyond the data that's here and readily available to you to really dig deeper and do some research in your own communities as well. There's a whole bunch of reports and survey tools that other people have used that you can check out here as well. So with that, I'm going to hand it over to Sean to talk about a lot of the other kind of equally exciting and interactive parts of the website.
Thank you, Genevieve. As we've mentioned a number of times, to access the website, you'll need to navigate to joinbankon.org. And the first thing that I want to draw your attention to is the sign-up link that you'll see in the top navigation menu. Basically, you have three different options for using the website. If you manage a program, then you can sign up for the site as a program administrator, and then you'll have full access to the website, which includes permissions to edit and update your program's individual detail pages, which I'll show you in just a few moments. If you're not a program manager, then you'll want to sign up as a general joinbankon.org member. And as a general member, you have all of the same permissions as the program administrator, with the one exception being that you can't make edits to your program's detail page. So whether you're a program administrator or a general member, you can still access all the content, download and upload resources, find programs, use the Research Your Community tool, and a whole lot more. But regardless of whether or not you want to use the site as a program administrator or a general member, you'll need to register from the sign-up page that you see in front of you. So you can choose to become a joinbankon.org member, which is the second link, or to become a program administrator, which is that third link. Finally, the third option is to use the website as a guest. And this is how you would use the website if you don't register for membership, or if you do register but choose not to log in. If this is how you're using the site, you can still access all of the content that's already there, but you just can't contribute your own content. So, for example, in the discussion section, you can read what other members have posted, but you will not have permission to post anything yourself. So this is why I would encourage all of you to sign up as members, because then you have full access to everything on the site. So in order to do that, you click sign up, you fill out the form, and the system will send you a confirmation email, which if you don't get that, I would advise that you check your spam filter because sometimes it does get lost. And once you've confirmed your membership via that email, then you're ready to start using the site. I'll also point out on this page that if you're interested in getting email updates but you don't want to register for a membership, you're welcome to do that too. That's that first link that you see on the page in front of you where it says join our email list. So with that overview out of the way, I want to point out some of the helpful features of the new joinbankon.org, in addition to what Genevieve already mentioned about the Research Your Community tool. So let's start with the Find a Program page, which you can access in this left-hand navigation bar. And one of the things that I like about this program locator, beyond the fact that you can get to know about a particular program and obtain their contact information, is that there's this interactive Google map where you can really see the scope of the local bank-on programs, and you can see really where all of those programs exist. So you'll notice that all of our listeners on the coasts and the Midwest are really well represented. And you can actually see the incredible opportunities that there are for folks who are living in the South and in the Great Plains for connecting un- and underbanked individuals with accounts by starting programs in those communities. In addition to this map, you can also search by city or state or proximity. So for example, here underneath search for a program, if I want to look for a program that might be in my area, I would say perhaps that I was looking for a program within 50 miles of my zip code. So I'll type that in. And once I click search, it will show me the programs that are available within 50 miles of my community. So you'll see that for me personally, I could either get more information about Bank on Gaithersburg, which is in the Maryland suburbs of Washington, D.C., or Bank on D.C. itself. You could also choose, if you go back a page, you could also choose to browse through the list of programs at the bottom of the page, below that program locator that we just looked at, where there's a directory listing of programs that have formally launched, which are alphabetized by state. So from there, I want to take you all to the Start a Program page, which you can also access from the left-hand navigation bar. And the Start a Bank on Program feature offers step-by-step instructions, advice, and best practices for building a bank on program from the ground up. You'll also notice that many of the pages here have links to additional resources that may be of use to you located in the upper right-hand corner. So for example, when you're on the Start a Bank on Program overview page, this green box that you see in the upper right-hand corner will take you to a number of resources that relate to that overview. If I were to click on step 3, for example, I wouldn't necessarily see all of those resources because there may not be any that have been uploaded. But as you can see, I can click through each of these different web pages to find information in that sort of step-by-step format. So speaking of those resources, I want to next draw your attention to the resources section of this website. Here you'll find hundreds of resources with more being added on a regular basis. And these resources might be publications, they might be websites, they might be videos, they could be promotional materials, contracts, or a variety of other pieces that aid users in every step of the bank on process. Whether you're just now in the planning stages and you're very early on in your program development, or if your program has been operational for years, I think that you'll still find this to be a useful resource. So to search these resources, you can either type in some kind of keyword or the name of an organization, or you can select as many of the tags that you see in front of you. So for example, if you're getting ready to launch your program and you're interested in how to go about promoting it, then you can select Marketing and Outreach and Bank on Program Materials, and then click Search. What should happen then is you'll be taken to a list of 11 different resources that have to do with that particular topic. As another example, I could type a certain resource name, and in this case, I'll use the resource that Laura was talking about, the scan of the bank on field, and I can type in Banking on Opportunity in the resource name field, and you all have to bear with me as I forgot to uncheck the different tags. If you just search by the name of the resource, then it will yield that result. And you can click on that resource, and it'll take you to the page where you can download it. So I won't do it right now to show you all, but if I clicked on Download this resource, I would get the full PDF version of the Bank on scan. So you can also, if you go back to the resources homepage, simply search through all of these resources in their list format. So if you bear with me here, as we go back, what you'll notice is that all of the different resources are listed below the search fields. So there are 3 different pages of resources right now, and if you're not looking for anything in particular, then you can browse that list at your leisure. So there are 2 more features that I want to show you before I turn it back over to Genevieve, who will take your questions. The next feature is the discussion section, and you can also click there just like each one of the other resources I've pointed out to you. You can get there through using the left-hand navigation bar. And when you click on discussions, you'll be taken to our forum. And here, assuming that you're logged in, you can contribute to the conversations, and those conversations are, in essence, whatever you want them to be. So perhaps you're struggling to get all of your participating financial institutions to report data about the number of bank-on accounts they opened in the same way. If you go here, you could post whatever questions that you have to get feedback from other users in the same situation. Or perhaps you're in Portland and you want to create a bank-on program for your region, but the regulations in the Oregon suburbs are different from those communities just north of Portland across the border in Washington. So if you wanted to know how you could overcome some of these obstacles, you can write about your concerns here, and perhaps somebody from Bank-On Greater Cincinnati has experienced the same thing since their program straddles the border between Ohio and Kentucky, and they'd be happy to answer your question. So once you're in the forum, you can click on any of the different threads. The one that you see here is the Bank-On discussion welcome. And if you were to click here, you can either start a new topic, or you can click within the subjects that already exist, and then you could reply to that particular topic. What I want to point out again here is that though you would be able to read any of the posts that have been contributed by any of the users if you are not logged in as a member, you won't be able to actually contribute any content until you've actually logged in. So that's why we would encourage you to sign up for a membership rather than use the site as a guest. Finally, I want to show you all the news and events section of the joinbankon.org website, which once again you can get to using the left-hand navigation bar. And if I sound like I'm being repetitive, I apologize, but this is where you can really get to every part of the website, and we've really tried to make it as user-friendly as possible. So once you click on the news and events section, as you might expect, the news and events section has news and events. But what's exciting, I think, about this aspect of the website is that you can submit your own content. So what we do is compile news about bank-on programs as best we can by scouring the internet, but sometimes we don't always see news that comes from local media outlets. So for example, if your program has been featured on your local news channel or in your local newspaper, then you can actually submit that content online and it will get posted to the website. You can also submit press releases from your organization or from partner organizations, and we can feature those as a means of earning publicity for your local program. Finally, if there's an event that's relevant to the Bank-On field, whether it be one that your organization is hosting or if it's for people working to connect unbanked individuals with accounts more generally, then you can submit it to be featured on the website. You can simply click these links in that introductory text on that first news and events page that you come to and select which one you want. So for example, if I wanted to submit a news story, I could click on that link and it would take me to a form. I would fill out that form and I would submit all of the required information. Once you click submit, it goes to a site administrator who will approve that resource or that event or that upload, and it will get posted to the website for everybody to see. So the news and events section is definitely a valuable resource if you're looking for the latest updates on the Bank-On field, and it's also a great tool that you can leverage to bring more visibility to the work that you're doing at the state and local level. So with that, I'll turn the program back over to Genevieve for the question and answer session. But if there are any items that I wasn't clear about, or if there are questions about other parts of the website that you have, I'd be happy to answer those if you just go ahead and submit that question.
Great. Thank you so much, Sean. Okay, so you all have been sending in a bunch of questions, so I'm going to go ahead and start fielding those out to our speakers, and please feel free to keep submitting them during this period. So the first question I have is for Louisa. And Louisa, the question is the $40 million budget item for Bank-On USA that you mentioned earlier related to the recent notice in the Federal Register which sought input on how to structure programs?
That's a good question, and I think I'll try to give a fairly brief answer, and then if someone wants to contact me and talk more depth offline, I'd be happy to give my contact information. Our Office of Financial Education and Financial Access in September released a request for public comment on implementation of Section 1204 of Dodd-Frank Wall Street Financial Reform Act, which enables the Treasury Department to implement a number of different types of programs related to promoting access to financial services for low and moderate income folks. So it is pretty general, and we received comments. We just closed the window a couple of weeks ago, and we're reading through those comments now. So that was fairly general. That may affect the requested $40 million in for Bank on USA. The $40 million, it's actually 41 million in the President's budget for 2012 for Bank on USA is more specific. The expectation is that the principal amount of that would go to, most of that would go to grants to community-based collaboratives for Bank on implementation. Some of that would be used for promoting innovation, both on the product side and on the community side. And then some amount of that would be used for technical assistance and capacity building, as well as for research and evaluation on the field. So the two are not exactly the same thing, but there may be some interaction between the two. If someone has a more in-depth policy question about that, I'd be happy to talk with them sort of offline.
Great, thanks, Louisa. The next question is for Laura, which is, what kind of information do we have about those 300,000 Bank On accounts that were opened? For example, do we know how many of them are still open, or if the deposits in the accounts are growing?
That's a great question, and unfortunately, it's a very difficult one to answer. So first off, that number is aggregated nationwide over time, and so it's a very, drawing from a complex set of sources to get that number, and it hasn't been drilled down to it all to look at the things that were mentioned in that question. But it's a great question, and those are great outcomes that Bank On programs are trying to look at to evaluate the real impact and effectiveness that the program is having on and underbanked individuals in their communities. So, one thing I mentioned in my final slide was a big challenge that the Bank On field has been facing is this issue of collecting accurate data on account openings and account activity, and that, that could be a whole other webinar, and in fact we had Genevieve speak on a whole other webinar related to that topic. So, again, I would be happy to expand on that offline if people have specific questions around tracking issues, and I know that Genevieve, you and your colleagues at CFED have worked more extensively on that than we have, and you could probably maybe weigh in a bit and talk about some of the things that have been done through Bank On USA to address that tracking challenge.
Yeah, thanks, Laura. So maybe I'll just say briefly, and Sean is going back, if you could go back to the Start a Bank On Program section, Sean, and then click on, scroll down the steps. Okay, and then, oh, sorry, no, up some of the middle steps there. The step on data tracking and reporting, step 5, if you could click on that on the left-hand toolbar. No, in the left-hand, yeah, right there. Okay. So this is where all of us that you hear on the phone today have kind of gotten our heads together with all of our respective kind of experience and research as to what programs are doing to track performance of these initiatives and these accounts. And what you'll see here is just a listing of what are the standard types of information that Bank On programs are asking financial institutions to track. So I just wanted to call folks' attention to, if you want to know, like, what are the basics that are generally asked for, it's here, you can find it here, but this larger question of how would we get some kind of uniformity across programs that we could try to aggregate nationally to add the kind of nuance folks are asking for to the numbers that that Laura asked about. I think it's thorny, and certainly our whole team and Louisa have been thinking about this a lot. Louisa, I don't know if there's anything more you want to say about that other than we've been thinking about it and doing a lot of due diligence to get the field's take on it.
I guess I would just add that we will continue to think about it. We do realize that this is a major issue for the field, is this sort of lack of consensus about measuring what is actually happening in Bank On initiatives. That is a real concern for us at Treasury, and so as well as I think most of you in the field. So we are continuing to think about what we can do to help that conversation along. So I think it's an ongoing conversation.
Okay, thanks. So now there's a very short question here that I can answer, but I'm going to then segue it to a question for Lee. The very short question is, when you are talking about and underbanked, are you including use of credit unions rather than banks? And the answer is yes, we mean both. And the survey data that our estimates are based off of are asking the question, do you have a checking or savings account with a bank or credit union? So yes, we are including credit unions. And segueing from that, there's a question for Lee, which is, what are some of the biggest challenges involved with getting banks and other financial institutions, I guess like credit unions, on board with Bank On in new cities or areas?
That's an excellent question, and it's something that is obviously changing and evolving as the kind of banking industry and the financial situation in this country has changed pretty dramatically, obviously, since we launched our program back in 2006. So we actually had, it wasn't, so I don't want to make it sound too easy, but it wasn't that difficult to get the banks engaged. I do think genuinely a lot of banks and definitely most credit unions want to help the community, and especially at the local level. So when we convened our banks, we definitely tried to make it out that this was a way for them to get new revenue, that this wasn't a philanthropic or a charitable activity, that this was a way that they would get new customers. And to answer the previous question, in San Francisco, our accounts, between 80 and 90% of them are still open and have about just under $1,000 average monthly balance. And that's been consistent across the board since we started tracking data in 2006. So some of the challenges, I think, that people are finding is that when you negotiate the product, there's three big areas: negotiating the product and getting banks and credit unions to agree on the terms of what they can offer. And as costs and fees are starting to go up with some of the regulatory changes in response to that, I think a lot of the bank-ons now across the country are struggling to say, well, do we put a $10 cap on it, which means we may lose some of the major banks, or do we now allow it to creep up into $12 for a monthly fee or $15 for a monthly fee? There's been some wins on the other hand. The great regulatory changes around overdraft mean that it's way easier. I think some of the communities have managed to negotiate overdraft-free accounts. That wasn't possible when we started this back in 2006. So I think the fluid environment is a bit of a challenge. We actually kept ours a little bit vague on purpose. We have minimum criteria, but we didn't try and make it all be exactly one product because it would have been too difficult to get banks and credit unions to agree. And also, obviously, not every customer is looking for the same thing. So I'd say that's a challenge. Data tracking is always a challenge. And the training of branches, I think, is a really big challenge. So we didn't have much of a challenge in San Francisco, at least initially, about getting the banks to join. We have 75% of all of our banks, which represents about 170 retail banking locations. And all of the banks are still in the program, besides one or two that we actually asked to leave because they weren't meeting the standards. And then, of course, there's been all the different mergers and things like that. But I do think that means there's a lot of bank personnel, which is a really big issue, and that is not just the tracking issue is complicated because you're asking people in branches to be tracking accounts, and there's so many of them. We have 170 branches, which employ, on average, maybe 10 people per branch, and it's a really high turnover industry. So I think some of those are some of the challenges. Plus, there's sometimes a lot of cynicism around whether or not low-income customers can be profitable. But I think there's been enough work done on that that you can kind of offset some of those arguments.
Great, thanks, Lee. That's really helpful, and it was really nice to get a little more detail on what you do actually know about those accounts that have been opened in San Francisco. Okay, so here's a question for me, which is, for the at-risk populations tab on the website, do the check marks for at risk of being unbanked or underbanked remain the same for each community, or do the check marks change depending on the community? So that's a great question. They do not change depending on the community. Those check marks are based on the FDIC's national findings about which groups are at highest risk, and then the demographic data you see that does change for each community tells you how prevalent those high-risk groups are within the community. So thanks for that question. So a question for Laura is, can you speak to the funding needs for a Bank On program and the staffing needs, and are there best practice models relative to the budget?
Sure, and that's a good question. Those are sort of the two key infrastructure pieces, that you would need for any program to be sustainable. So first I want to just point out that all of this information that I have in my head is available online at joinbankon.org. And most of it you can find in the numbered sections under Getting Started. So, there are sections there for, I think there's a section on committees, and I'm just looking at it now. Whoa, it's moving on my screen. Launching and sustaining a bank-on program. So a lot of that information would get at that question. And most of that content was also taken from our toolkit, which, so you can access it on joinbankon.org or on our website. But as far as funding and staffing needs, the great thing about the bank-on model is that it's very low cost to start. It's very grassroots. And so, most communities, when they start a program, the only costs that they really have are associated with marketing, and you can get a lot of your marketing materials donated or created pro bono. So it's very low cost to start a program, and typically, if you can dedicate one person, whether it's an existing staff at a lead organization in that's starting the program, if you can dedicate one person to kind of manage the planning phase and the launch phase and to be the point person to coordinate all of that, you can easily get a program off the ground in a way that's not terribly resource intensive. Beyond that, there are some challenges associated with finding additional funding to expand or grow a program or to staff a program full time, and that would fall under sort of what we talked about with the data tracking challenge, that's something that we are aware of can be an issue for a lot of local programs, and we're thinking about it. We're working with folks on the ground who have found good solutions to those challenges and are thinking about ways that we can support other communities to implement some of those same solutions.
Great, thanks, Laura. So my next question, I actually think may be for both Lee and Laura. So maybe I'll start with you, Lee, and then Laura, if you have anything else to add, that would be great. So the question is, what are your thoughts, and I happen to know you have them, about mandatory financial education for bank-on clients? And then what about providing financial education to deter bad experiences from happening to participating consumers? So maybe just kind of how do you think about the role of financial education, in a bank-on program?
Yes, you're right. I do have an opinion about that. I think it's really a bad idea, frankly. Mandating financial education in order to get such a simple thing as a checking account that 80% of the population has. I know I didn't have to take financial education when I opened a checking account. And a lot of the people, I think, and Jen, correct me if I'm wrong, who are unbanked have never had an account before. It's not necessarily an issue of mismanagement all of the time, which I think sometimes is a wrong assumption. When we first started this, that was an idea that came up, and it was pretty clear that obtaining a checking account isn't enough of an incentive for people to sit through hours of financial education. So we decided not to go down that road. We do offer lots of financial education through our program and connected to our program in the community every year. We do grants through community organizations. We have trainers who are specialists in training low-income populations, and they go out to community groups and other places to conduct financial education. But I think, frankly, that one of the mistakes that we make in many aspects of our work is we put up too many barriers to access, and I don't think financial education, it should be mandated in order to get a checking account. However, what we do is encourage the people opening the accounts to really make sure that they're teaching people at that time how to manage their accounts and how to avoid fees or other things, and understand how the accounts work. So when we do our training of bank personnel, which we do with every bank at least once per year, we do secret shoppers to make sure that the tellers and other people in the banks know what's going on with the account. And one of the things that we really emphasize is that that bank, the person opening the account at the bank, or credit union is probably one of the very few people who will ever talk to that client or customer about their finances, and that it's very important that they do a good job of introducing them to that account. So I think there are other and better ways to introduce people to financial education than making it a barrier to banking.
And Genevieve, this is Laura. If I could chime in, I think we would echo a lot of Lee's sentiments there that, again, Bank On is designed to reach a population that already has barriers to banking, and requiring financial education could create an additional one. And I would also say that from our work with cities across the country, I think it's safe to say that what has emerged as a best practice is not requiring financial education. Very few programs that we know of do require financial education. And there are pros to it in that it can help engage your financial institutions. They feel better knowing that that they have a customer who may be a little bit less high risk if they've gone through financial education. But at the most, it seems to be common for programs to have individuals with check systems be required to go through financial education. Other programs offer some different options, such as financial counseling or a little bit higher touch financial education opportunities, which can have greater impact and outcomes for un- and underbanked individuals. But again, those programs don't require financial counseling.
This is Louisa. I want to add, I think there's a lot of good points that have been said about not erecting additional barriers. I think, though, it's also important to stress that options for financial education, financial counseling, financial information are really critical to a lot of people, even after they've received an account, to help them not just manage that account, but also move ahead in their other financial goals that they may have, whether they're moving into a new job and they want to be able to manage their new income, whether they're looking to save for perhaps a child's education or for retirement or for other long-term and short-term purposes. I don't think my colleagues mean to say that there's not a need for or a use for financial education, but the emerging practice has been not to put it as a barrier to opening an account.
Great. Thank you all for those really thoughtful answers. Laura, are you aware of any Native American tribes currently operating a Bank On program? Or Louisa, or anybody?
No, Genevieve, we aren't aware of any.
Okay, thanks. Okay, switching gears a little bit, a question for Louisa. Has there been any effort to coordinate with the larger financial institutions to have a Bank On ready product for any new programs being developed rather than having to start from scratch in each community?
I think Lee talked about this a little bit earlier, that some of the hard work has been around engaging financial institutions that have large markets in creating a product. And so we have certainly heard that there is a lot of interest in large financial institutions creating a standard product. And that has, I think, emerged some sort of statewide level products have emerged, particularly starting with Bank On California, which, just to remind folks, came up with a statewide model back in 2000. I think they launched at the end of 2009, really engaging all of the largest banks in the state, which is a pretty big market. So we're seeing that at the national level that hasn't happened. There's some, it's a conversation and a discussion that we're having both internally with the Treasury and externally with our other bank regulatory partners and others, whether or not that's appropriate for the federal government to encourage, and if so, how.
Great, thanks. That's really helpful. Here's a question for Laura. Do any of the Bank On programs offer a loan product to pay off past banking charges and or NSF fees? And maybe, in fact, I will take the liberty of broadening that question a little bit to ask if any bank-on programs are offering credit or sort of non-depository account products generally.
So for the first part of the question, offering specific types of bank-on programs offering specific types of loans to pay off overdraft charges and things like that. Well, we're not aware of any programs that do that. That certainly isn't to say that that doesn't exist somewhere. But beyond that, there are quite a few programs that have incorporated a small dollar loan product into their bank-on offerings. And I would imagine that Lee could probably speak to that more specifically with their small dollar loan product. And I can think of a handful of communities that do it as well, and would be happy to provide more specific information later if anyone's particularly interested.
Yeah, thanks, Laura. We do have a small dollar loan, payday loan alternative that we launched as part of BankOn. It's called Payday Plus SF, and there's information at paydayplussf.org. That was actually the credit union members or partners in BankOn decided that they thought that they could do more than offer the basic checking product, and that they wanted to see what they could do. And so when we met with them and they asked us what we thought the most effective thing would be, of course it was an alternative to payday lending. So it's a small pilot. We have 5 credit unions offering up to $500 loans repayable over 6 to 12 months at an 18% maximum APR. And the program's going really well. We're doing about 300 loans a year. So we're keeping it small until we learn a little bit more. But we're having the research that we're doing this year, and so hopefully next year we'll be able to release some results about that product and how it worked for clients, but also how it was, if it was profitable or at least cost neutral for the credit unions providing it. So stay tuned.
And Genevieve, this is Laura again. If I also wanted to point out that again, while a bank-on program might not specifically offer a bank-on small dollar loan product like San Francisco is able to do, a lot of credit unions offer that just as a normal part of their product suite. Is that they're chartered to serve usually underserved populations and might have an appropriate product that a city or a bank-on program could consider accessing just through a relationship with that credit union, even if it's not formally part of the bank-on product offerings.
Thanks, Laura. Actually, a somewhat related question, just kind of getting to this expanding beyond basic checking as the bank-on model. Do the majority of bank-on programs operate kind of within or under the auspices of an asset-building coalition? I don't know if the question about that came from Seattle, where I know they're closely related, asset-building coalition and bank-on programs, but I don't know if that's true anywhere else. Do you have any information on that?
I would say that that's a good and common strategy to use an existing infrastructure like an asset-building coalition to build a bank-on initiative off of, but it's not necessarily the norm. And Lee mentioned this in her earlier remarks that the crux of the bank-on model is this public-private partnership between municipal government, community organizations, and financial institutions. And so that, that would be the norm as far as what the bank-on model is built off of, and quite a few communities have used an asset-building coalition as the launching pad for the model as well.
I guess I would add, for those communities that haven't connected with the broader asset-building strategies such as earning and tax credit campaigns, IDA, individual development account programs, VITA sites, volunteer income tax assistance sites. I think there's a lot of opportunities for those types of initiatives to come together. Maybe foreseeing your next question, Genevieve, and start thinking about what are next steps for bank-on initiatives.
Thanks. I have a question that I think probably both Laura and Lee could shed light on, which is about how can bank-on programs, or how do they currently cater products to help low-income consumers use the account? As in, once they've got money into it, how do they use it for transactions like expedited bill pay or affordable money orders or wire transfers? So do you know anything about kind of product requirements or other innovations to help people really use these accounts to manage their financial lives?
Well, I can speak for what we do here in San Francisco. We ask all of those questions, and the vast majority of the accounts offered through bank-on programs are kind of regular checking account type products. So you have full access to anything like online banking and bill pay and mobile banking and debit cards and ATMs and all that kind of stuff. We do survey our banks for additional products like money orders and remittances, and we publicize those. We have an online directory as well where people can say if those are the kinds of products that they're looking for and match them up to the right bank account or credit union product for them. We're also looking at now engaging in a broader campaign around direct deposit usage, because that's another way that we think is obviously a better way for people to be using their bank accounts, and we think it might help cut down on the number of underbanked people who do have accounts that are still going to check cashers to turn that paycheck into cash on payday. So there's a number of things. Some of the other programs, and Laura will maybe have more information, I know have negotiated one free money order per month or other kind of elements like that into their program.
I think the only thing that I would add is that there are a handful of programs that have incorporated additional, perhaps slightly more advanced features into their products. We mentioned the free money order. Bank on Newark does that. Quite a few programs encourage and facilitate access to direct deposit. Most banks require that anyways. I think the most important thing to say is probably that utilizing a bank account successfully is something that is on the minds of most cities involved in Bank on Work, that they want to look at how to think beyond just a simple basic checking account, and how can they really help their customers become successful bank account holders who build assets, who aren't just using their bank on account to store their money, but who can use it as a form of economic mobility. And that's something that is emerging in to the field of financial access, and it's something that we've seen a lot of cities be interested in doing, even if they don't have a bank-on program. So that's something that we're hoping to really expand our knowledge base on in the coming year, to help cities with bank-on programs or without them think about how to advance their residents sort of through a continuum of safe, affordable financial services and products.
Thanks. We've got a question about whether or not banks receive CRA credit for being involved in a bank-on initiative. And I'll take a stab at answering this, and then I don't know if Louisa will want to weigh in on this as well. But my understanding from having talked to a bunch of banks about this is a lot of them went into participating in bank-on programs thinking that they would, but actually getting it has been really challenging because there isn't sort of a clear, streamlined guidance on how this would fit in, and then sort of individual examiners can choose to do it or not. So my impression from the banks I've talked to is that not many actually have gotten it yet, although most of them were hoping to. But Louisa, you may be able to shed additional light on that.
And I don't have my CRA regulations right in front of me, but participating in an initiative like a bank-on initiative is likely to be eligible for CRA credit in a couple of different ways. Making a grant to a community organization for financial education or participating in financial education in a CRA eligible area would qualify under the service test, as well as certain types of account opening, having accounts in that area would also qualify. I think the challenge has been those are not highly weighted under CRA, so the level of activity may not merit a whole lot of consideration under CRA. Depends a lot on the bank, depends a lot on the footprint and the size of the community being served. Probably a small bank doing a lot in one area, it might have more effect than a large bank kind of spreading things out over a number of areas. But if somebody's interested in that question in particular, the regulators, the bank regulatory agencies, the FDIC and the Federal Reserve and the OCC are very engaged in bank-on initiatives and would be very happy to talk with any bank that they regulate about the CRA implications. And we'd be happy to make that connection if you don't know who those people are.
Great, thanks. That's really helpful. A question for Lee is, could you talk a little bit about the barriers that both kind of a history with check systems as well as problems sort of with identification issues, like what type of identification a person has? Can you talk about some of the barriers that those might provide to accessing accounts and how to have bank-on programs been able to overcome that?
Yeah, so when we first started looking at this, we were looking at barriers that are hard barriers, like the check systems and ID issues, and then also more softer barriers or perception issues around expense and costs and not feeling welcome and not trusting banks, those kind of things. But the two that the question is referring to, with check systems, it's common practice, I believe, for people who have had an issue with a bank account before, particularly one that was closed by a bank, or maybe it was closed not in good standing with money's owed to the bank, for that person's name to be placed on a national register, which banks then use to determine if they're going to open accounts for people or not. And it's a pretty prevalent in our communities. I think one of the neighborhoods in San Francisco, I saw data a few years ago that 25% of the people that lived in that community were on check systems. And before we started Bank On, that would mean for most of those people they just were not able to open an account because they would go to a financial institution and be turned away. So in our program, we worked with the banks and said, okay, you can't just have a blanket policy of turning down people who are on check systems. So the deal that we made was that they do not have to offer accounts to anyone who has a fraud history on their account. We thought that was a reasonable provision. But if someone has been on check systems for more than a year, so whatever it was that happened, if they overdrew their account or bounced a check and the account was closed, it was overdrawn for a period of time, whatever the case may be, if that happened more than a year ago, that the client should be able to get a second chance account. And a lot of banks do, and credit unions do offer these second chance products that are specifically designed for people who've had these problems before. If the person had been on check systems more recently, that was one instance when we said it was okay to require financial education. And actually the reason for that was more because we didn't want someone opening an account at a Bank of America, overdrawing it, and 2 weeks later opening an account at Wells Fargo, overdrawing it, closing it, going to the next bank, and then saying that, the mayor of San Francisco said that they could. So that was one of the areas there. Restitution policies, so if people owe money, those vary, and we try and make it public as much as possible. But oftentimes, if money is not owed to the institution that you're trying to open an account with, they'll go ahead and open the account. Second one, briefly, we're looking at forms of identification issued by the Mexican and Guatemalan consulates. So the Mexican matricular card, the Guatemalan consular ID card are both mandatory to be accepted as primary forms of ID in our program. There are many other types of ID, including foreign passports, that are legally and Patriot Act legal to be used as primary forms of identification. So we wanted to make sure that people who didn't have accounts on your ID could open an account.
Great. Thank you so much, Lee, and thank you, everyone. I can't believe it, but we are now at 1 minute till the end of our time, and I want to be respectful of everyone's time. I'm really grateful to all of you who've hung on here with us for an hour and a half, and extremely grateful. Thank you so much to all the speakers and presenters and everyone who worked to put this webinar together. And I'm sorry that we couldn't get to all of your questions, but I'm so delighted that you all had so many questions. You can email further questions to info@joinbankon.org, but also you can also register for the site and ask your questions in the forum, and that's really what it's for. And hopefully today's conversation just piqued your interest and kicked off your realization that there is this whole community of experts and practitioners out there that that can respond and can share information with you. And there are so many resources about programs that have gone through things already on the website, and hopefully folks can engage with you in the forum to answer more questions. So with that, I'm going to say thanks again so much. This recording will be available on the website soon. And have a great afternoon. Thank you, everyone.